Hey everybody, happy Wednesday. Welcome to Everything Money Channel. As always, Paul and I welcome you in and thank you for your support of our channel for all these years. Today we're talking about Biogen stock. At the end of this video, you will learn everything you need to know about investing in Biogen, this wonderful company that Paul and I have been huge fans of for many, many months now. There's some exciting news moving into Biogen, what they're doing, what their CEO is doing. We'll talk about what we own in this company and why we love it so much. So by the end of this video, you will learn everything you need to know about the financials behind Biogen, not just because it's going up or down, but what is the PE ratio? What kind of revenue are they doing? What kind of profit are they doing? Their margins? Are they selling shares? All of this in our 8-pillar analysis, which we will talk about right now. And I welcome in my dear friend and lover, Paul Gabriel. How are you, my dear friend?
I am wonderful.
You're silent. Paul, you own this company. On July 1st of last year, I bought $5,000 of this company. I own about 19 shares. I bought in at about $264. I'm certain your stake in this company is much greater.
I have a few shares, but the biggest thing that I have is I have a lot of puts written on this company. So for those who ask a lot of questions about that, what a put means is I am selling the option for someone to force me to buy Biogen at a price that I want. So if you look at right now, just do it really quick, Biogen's at 281. Today I wrote two puts. I wrote puts at 240 and I wrote puts at 230. So I sold this for $6 and I sold this for $3.50. So what this means is somebody gave me $6 for the right to force me to buy a Biogen at $240 on February 19th of this year. So 32 days from now. So what this means is if Biogen finishes above $240, I don't have to buy the shares from them at $240. I keep the $6. I keep the $6 either way. If it falls, let's say it goes to $230. I keep the $6 and I'm forced to buy the shares from them at $240 while they're actually worth $230. So I'm actually buying the shares at $240 less my $6. So I'm basically paying $234 for the stock when it's selling for $230. Same thing here at $230. Now, it's hard for sometimes people to understand options. I didn't understand them at first either. It took me a while. But basically, I'm selling people the right to force me to buy a stock at a certain price. Why would I do this? Well, I do this because if the stock is higher than I want it to be, I can go out in the future and say, okay, if it falls this low or lower, I will gladly buy it at this price, but you got to pay me to buy it. You got to pay me today to buy it. How much? $6. So if you pay me $6 today, you can have the right to force me to buy Biogen at any price below $240. That's it. So if the price falls to $200, I'm still buying it from them for $240. So I'm losing $40. But the reason it works for me is I would have bought it at $240 anyhow. So I don't care if I'm basically saying, pay me $6 to make me do something I was going to do anyhow. That's the idea behind it. So I wrote a lot of contracts today. I wrote these two big ones for 32 days from now. And if I get them, I will own a lot of Biogen. It'll be about 4% of my portfolio.
If this is the first time viewing our channel, we're going to analyze everything about Biogen, the numbers. Obviously, Paul, this is a biotech company. They treat MS, they treat Alzheimer's, and they have some exciting news. Their CEO in December bought $750,000 of shares himself.
Oh, great.
I know you love the insider purchases. And so let's start talking about Biogen and what they're up to. So,
okay.
What is the market cap of this company?
So it's a $43 billion market cap. This is what I care about when it comes to the stock price. I don't care about the actual share price. I care about the market cap because that is the number of shares outstanding multiplied by the stock price. It's easy to manipulate stock price based on number of shares. This is what matters.
Pillar number one is our PE ratio. We want this below 20, Paul.
Look at this, 9.3. Yeah! So this is a definite check mark here.
How about profit margin? We want this above 10%. I'm assuming it's good.
Well, in the last quarter, it was 21%, check mark. Nice. In the last 12 months, Seth, it's been about almost 30%. What is 5 billion divided by 14.2?
I have no
It's
clue.
about 30% right there.
Okay, great, 30%, love it.
That's a huge number. So it's a definite check mark. And keep in mind, by the way, Seth, one thing we sometimes look at, no dividend. So Biogen is spending all their cash in other ways, and we'll see that later, but they're not paying a dividend right now.
Pillar number 3 is revenue growth. Obviously, we want their revenue going up, Paul. I'm pretty sure it probably is.
Let's see, annual revenue growth. 10.5 to 13.7, check mark. And again, this is only through the end of 19 because they even though 2020 is done, they have not officially closed their numbers and reported their earnings for 2020.
How about profit growth, pillar number 4?
So profit growth, we go to the bottom. Net income, 3.5 to 5.9, check mark there.
Nice. How about pillar number 5 is number of shares outstanding. We want the share count going down so that they're buying back. I'm assuming they are, Paul.
They are. They're taking that cash flow, and it seems like they're buying shares back. 231 million down to 187 million.
This is all checks so far, right, Paul?
So far, all checks. They're really doing a good job of making sure that investors in the past own a bigger percentage of the company than they did before.
Pillar number 6 is current assets greater than current liabilities.
Current assets are currently 7.8 billion. Total current liabilities are 3.8 billion. So definite check mark there.
Nice. Now, I lost my mind last week in laughter because I can feel the heat coming from your heart and your soul when you get all 6 checks. Let's move to free cash flow, which is pillar number 7.
So remember what free cash flow is, guys. It's cash from operations less your capital expenditures. This is how I look at earnings more than net income. Net income can be manipulated with non-cash transactions like depreciation and amortization. There are accounting rules that can change net income, but free cash flow is harder to manipulate. Is it possible? Absolutely, but it's harder. Free cash flow is used to buy dividends, to pay dividends, buy back shares, do big expansion, do major big transactions for the company to make it grow. So 5 years ago, it was about 3.3 billion, and in 2019, it was 6.4 billion. So definite check mark there.
Great. And then what's the average, or what are the 3 numbers?
3.8, 2.6, 5.3.
So the average free cash flow over the past 5 years is 4.3, Paul, billion.
4.3 billion. Guys, this is a fast-growing free cash flow. Their net income is growing all day long, I think, times 20, $86 billion.
Now let's slow down. Let's slow down. So what Paul just did is really our pillar number 8, which is price to free cash flow. So we take our free cash flow, which in this case is $4.3 billion, and you come up with a multiple. For fast-growing companies, the multiple can be higher
because you should be willing to pay more money to get more growth and faster growth, right?
For slower growing companies, we want that number to be lower, upwards in the 7, 10, 12 range.
Correct.
Usually the number would be 20. So you're
more
going
than 15.
You're going 20 here.
And here's why.
Go on.
One thing we haven't looked at yet, we're going to look at the 10K. Now, this is something that a lot of people have asked for. The 10K is their big year-end document. Guys, they have so many drugs in the pipeline. My father's a physician. Trader Moe's father's a physician. We showed them their pipeline, and their comment was, wow.
See, I'm astonished you're saying this because the research I did is they only have a few major drugs, maybe 5, 6, or 7.
Currently.
They are spread out all over the world. They have a nice wide range of uses all in different countries. But one of the drawbacks to a company like this is they do have to keep coming up with innovative drugs as these patents.
Or partner with other people.
I see.
So let's go back to this number.
So 86 billion, Paul, that is the market cap that you think this company is worth.
And what was it at? 41 billion.
43 billion.
So this is a check mark to me. I do still think that this company is a buy today if you're willing to be patient. And here's why. Let's go into the 10K. Here's the 10K. So this 10K is what the SEC requires people to write every year. They write their entire, it's 150, 200 pages in a lot of them, and it goes very thorough detail. Not many people read the 10K. We do. One of the things in drug companies I always talk about is what's their pipeline like. Now, guys, look at this. If you look at this, this is all their drugs that they're working on right now and the phases they're at. Guys, they have how many drugs right now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26 drugs and 1 biosimilar. And the biosimilar, we won't get into that. They have 26 drugs currently in phase 1, phase 2, or phase 3. Guys, phase 3 alone, they have 1, 2, 3, 4, 5 drugs in phase 3 alone, plus their biosimilar in phase 3. Guys, if it's only 50% that get phase 3 approval, which I think it's actually a little bit more than that, maybe 60, that alone is how many drugs? That's alone is 2 or 3 drugs. Then you go to their phase 1 and phase 2. If only 15% of those get it, they have 5 or 6 drugs that are coming out in the next 4 or 5 years. Their CEO has come out and said, if you're patient, our mid-2020s will be huge.
It is 58% for phase 3, Paul.
Is it 58%?
Yeah.
Wow, look at me. So on those 5, but including the biosimilar, they have 6 drugs right now in phase 3. At 60%, that's at least 3, possibly 4. And they're in a lot of the dementia stuff, which I think is becoming a lot more popular as people realize we're going to live a lot longer. And the great part is this company is selling for peanuts.
Yeah, so what we basically found is Paul's market cap, the value of this company is at 86 billion. It's currently at 43. This is very rare for our channel to find something this much underpriced and sort of not so much on sale, but just maybe not known about quite yet.
And again, I think this is a company you have to be very patient with, because as these new drugs come out, it's going to start jumping up and up. I am accumulating shares. I'm selling puts to accumulate shares because I can generate the income, and along the way, just keep buying, selling those puts, and as I get placed the shares, keep them and keep selling then covered calls on them. I think this is a long-term play for me. I could see myself owning Biogen for 5 or 10 years.
Would you like to pull up the momentum?
I would love to pull up the momentum.
If you're wondering, I got a hold of this company because I invest in Joel Greenblatt's book, The Little Book That Beats the Market. So if you use the magic formula investing strategy as a screener, this is definitely one of his stocks on his radar. And so that's why I got in this company. I didn't know what it was, but I followed that book. And so I'll be making new purchases next July, which as a viewer, you guys can follow along. And perhaps Biogen will still be on the list. Let's take a look at momentum, Paul.
So remember, with momentum, we want to see the blue line going above the orange line. The blue line is the 200-day moving average. It's merely the price. You take all the prices of the last 200 days, average them together. That's the 200-day moving average. And the orange line is the 300-day moving average. When we looked at a large basket of stocks, of 75 stocks, going back to 2000, and you bought when the 200-day went over the 300-day and you sold when it went below, you beat the market by about 1.2 to 2% per year. Now, that's before any cost of selling and et cetera, but a lot of brokerages now have free commissions, so you can still do well with it. It recently went below, which is a bearish sign. It recently went below the 200-day moving average, but as you can see, there's been a big jump up lately. That's going to start, that blue line, the 200-day moving average, will start shifting up soon. So I think you should watch this for momentum soon. It could very well end up breaking the 300-day moving average, which would be a bullish sign for the company.
As always, we welcome you in to watch all of our other episodes. Make sure you smash that thumbs up, tickle it, as I always say, because Paul loves to be tickled. And make sure you subscribe. We do, Paul, we do so many stocks every week. We do live streams on Tuesdays and Thursdays. And the most exciting part is our Patreon. You can join our Patreon. The link is below in the description.
But why is the Patreon so good, though?
Tell us, Paul.
The Patreon's awesome because everything I just did there and showed you will be available on April 15th through our software. If you join our Patreon today, any level, you get that software for free. It will automatically do the 8 pillars for you. Automatically. You don't have to sit there and calculate all that stuff. It'll have the financials, but it automatically spit out the 8 pillars for you. And we're going to keep adding more and more to the software over time. The Patreon price will be going up April 15th. So get in today, you'll be grandfathered in, you'll get all of our software for whatever, the lowest Patreon's $8 a month, the highest is $100. I just had somebody tell me today in the group chat for $100. It's a very small group, only 25 people, and the guy said, this is well worth more than the $100 a month I pay for it.
I know this is a shameless plug, but we really want to say, like, guys, I'm the viewer. I have no damn clue what Paul's talking about half the dang time, but I'm learning. It's taken years for me. This is a process. We want to teach you the process about thinking about this investment and what you should do with your money. The key part is being on our Patreon helps this process along. Trader Mo, one of the characters on our channel, is a day trader, but he says he doesn't have a lot of people to talk to on a daily basis about this. So you get with like-minded people access to Paul and I about what we're doing.
Hundreds and hundreds of messages are exchanged every single day, and our Patreon is small. Our Patreon's only 370 people right now. We have hundreds and hundreds and hundreds of messages that go out across every day.
Yeah, so take a look below if you want to join us. We'd welcome you into the community, and we appreciate your support. As always, we love you. All of our OG followers all around the world, we love you. Thanks, guys. We appreciate it.